another stock analysis, and this may be the biggest one of the year because today we are looking at Roblox. Now, I know what you're thinking. Wow, it has taken you this long to do one of the most important companies in the entire economy. And my answer to that is I'm sorry. But anyway, today we'll be going into Roblox for a stock analysis. Yeah, that's about it. They've seen a ton of growth as far as I know recently. They had a bit of a tough spot about a year ago, if I remember correctly. But honestly, haven't looked into their financials really at all. So we're going to get into it today. So if you're interested, make sure to subscribe and let's check out Roblox. All right, now this is going to be a little bit of a difficult video for me because I genuinely grew up playing Roblox. So the fact that they are let me just move over here, $41 billion company is just shocking. But anyway, they basically have an online platform where it is mostly geared towards younger people, and they make games and stuff, and there's games on there. And yeah, so it's Roblox. Let's look at Roblox's industry metrics. So first of all, daily active users is projected to explode in 2025, and they saw 82.9 million on average in 2024, which is amazing. Hours engaged, I'm assuming, is total hours on the platform. Looking like it'll be a very large increase in 2025 as well. And average bookings per daily active user, which couldn't tell you what that means, but also expecting an increase. And bookings, I don't know what bookings are. It's probably transactions maybe, or sales transact. I'm not really sure. But anyway, that's expecting to increase as well, which is wonderful. Again, $41 billion into Roblox, which is insane. Target price, $69, positive long-term growth rate of 11%. We're a little bit below that target price. And taking a look at their stock, they kind of had a bit of like a Robinhood situation where after their IPO, they blew up and then dropped back down and were flat for a while. And now they're kind of gaining a bit more traction. Honestly, I think the monetizable side of this company is just so strong and so good that it wouldn't really shock me to see them go a lot higher. But also, it's very difficult to say because at the end of the day, this is Roblox. And in my mind, and I feel like a lot of younger people that are kind of coming up in the longer this company exists, the worse it's going to be perceived, because right now there are fund managers and hedge fund managers seeing this small, they probably call it a software development cloud-based metaverse type company, and they see this with huge sales growth and they value it massively. But the longer time goes on, the more people there will be that have actually played and used Roblox's platform, and they're just going to see this as Roblox, which is how I see it. So this is super goofy for me, but overall we're gonna keep moving through here because at the end of the day, it is a very profitable, very strong growth company. But anyway, I don't know why I'm showing the chart again, but let's move on. Growth summary, aggressively positive, which is to be expected. I mean, this company has so many users, first of all. Second of all, it is so monetizable. There's so many ways that they can make money off of this. And one thing I will say is there is always the risk of liability because most of their users are young children. And at the end of the day, when you're using non-adults as your primary income source, there's always liabilities with that. There could be lawsuits in the future that say, hey, my kid didn't know they were spending money or something like that, which I'm sure they're very well aware of and they're taking steps to avoid that. I'm very positive they're doing that. But overall, I think they're going to be very, very aggressively growing in the future. So it would not shock me to see their valuation get even more insane than it already is at $40 billion. But anyway, we do have the nicely organized fiscal years here. I'll zoom in a little bit more. $3.6 billion in sales. That is up massively from a couple years ago. You could see that since they have went public, which apparently was in 2018, and no, it was not. It was in 2021. They do have numbers back to 2018 though, but since they have gone public, their sales have essentially doubled, which is crazy to think about because it was only a couple of years ago. But operating income is aggressively negative, and as is net income, which honestly I did not know about. Now, one thing I will say is that because this company is almost entirely online, I am positive that they can probably snap their fingers whenever they want and make it a net positive operating company. But what's probably happening here, and what I'm going to go with, is they are so aggressively going for growth here. I mean, you could just see $1.4 billion on research and development for Roblox. What are they researching for Roblox? I'm not really sure. But at the end of the day, they're pushing so much into growth that it is hopefully going to be massive in the future, which I'm expecting it to be. One thing I will say is that with their platform, most of the user experience is developed by users and under at no cost essentially at all to the actual company. So the fact that they are basically getting their platform built for free by their users is probably one of the greatest business models ever. I don't want to sound like too much of a child or too much of a whatever person, but like Fortnite, for example, has been doing a similar thing recently. And again, just to reiterate myself as a very slight credible source, I am a college student studying finance, and I've been investing for 4 years now, pretty aggressively. But Fortnite's doing the exact same thing that Roblox was already doing many years ago now, where they're kind of letting their users develop the experience for themselves. So I think that's a great business model, and it's definitely very lucrative. But I'm sure we will see a net positive from this company probably within 2 to 3 years. And until then, we're probably going to see their sales double again or more. It wouldn't shock me. Anyway, moving on to the balance. Oh, I forgot to check the total shares. Total shares are increasing a lot. Yeah, that kind of makes sense because they're losing money through their net income. Anyway, shares are increasing. That's kind of a negative, but we're gonna move on. A decent amount of debt, which is kind of shocking. They have 1.6, just about 2 billion in debt. However, they also have that much in cash, so it's not too concerning. Assets, again, since they went public in 2021, have blown up as well. They're at over 7 billion in assets. To be fair, a solid chunk of that is cash. So yeah, but also, as you can see over the last 2 years, they have really massively invested into long-term investments, which is pretty interesting. But also, it'll definitely have some longer-term benefits for the company. Um, Other than that, everything else is pretty much normal. So let's move on to cash flows. So looking at them, they're positive with operating, which is awesome. Their funds from operations have gone cash flow positive in the past year, which is a very, very good sign for the future of the company. Investing activities, you can see they have very aggressively been purchasing those investments we just talked about. So those are very negative, which is perfectly fine. And then they have been diluting that stock as well, which again is kind of to be expected. No debt issued at all, or very minimal debt issued in 2024, which is awesome. Very little in the past 2 following years as well. So that is good to see. At the very least, they're not aggressively kind of snowballing their debt in any way. And also, free cash flow has been positive nearly every single year that they've been operating, including an all-time high in 2024. So again, I think just with the short-term outlook of this company, they are really driving growth. And I think we're going to be seeing a lot more of that coming up fairly soon. Gross margin is at the highest we have ever seen. Look, yeah, which is fantastic. SGA to sales is at 56%, slightly above the 5-year average, which isn't great, but at the same time, I get it. They're developing growth and things like that. So overall, I would say as long as it's not massively increasing, it's okay. But another thing, operating margin has come down a lot, much lower than the 5-year average and the 2 years prior, which that is excellent to see. And probably, yeah, same thing with net margin coming down a lot. I think, again, we'll probably see profitability with them. I'm sure they've already projected it themselves, but I'd imagine it would be 2 to 3 years. If it's earlier than that, I'd say that's a huge positive. If it's not, I'd say either way, it's a very healthy company. No matter what, they can probably very easily cut their spending and keep the platform modestly growing at the very least and still make a profit off of that. But either way, moving on, debt to equity is a little crazy right now. One thing I will say with that is if we go back to the balance sheet, I believe they have very little equity. And yeah, they have only 221 million in common equity at the moment. So that does make sense as to why it's so crazy. Probably a better look here would be the debt to their assets, or maybe their debt to their capital, which you can see is both are well under 100%. I don't think their debt situation is of any concern at all. It's mostly just their unique situation with their equity, where they don't have a lot of equity currently. But overall, I think the debt situation is perfectly fine. You can see their debt is a fraction of their assets. So either way, it's okay. And now let's move on to the earnings. And by the way, I will not be doing a valuation for this video only because their earnings per share are negative. So there isn't really too much to focus on, unfortunately, but we will continue to move through it here. So looking at the operating metrics, we already went through some of this, but EBITDA massively beat estimates. Deferred revenue came in above as well, which is good. Most of that growth was long term, which is fine. Daily active users came in a little bit below estimates, actually, which honestly, in my opinion, is fine. I mean, 85 million people, that's insane. Hours engaged also increased 20% year over year. And then average bookings also came in above. I'm assuming this is some kind of revenue per user, which if it is, beating on that is massive, and that's what I'm going to assume that is. And then free cash flow came in below, which is not great, but overall, I'd say it's fine. Let's see if we can find some guidance. That is the big thing here. So this is most of just the stuff we've already gone over. Let's just see if there's anything too I don't see anything too much other than revenue up 29% year over year. That is awesome. Guidance, forward-looking guidance. Here we go. Okay, so first quarter revenue between 990 million and over $1 billion. We're going to also compare this to what we're currently seeing while we're here. So let's go into their quarters and see. So they are projecting first quarter 2025 to be their most profitable or highest netting quarter ever, which is interesting. Assumes there's no estimates in revenue recognition, such as average lifetime of a paying user. That's kind of crazy. Bookings between 1.1 billion and 1.15 billion. Whatever. Net loss between 287 and 267. So they are expecting a much higher net loss than we usually see. At least we haven't seen since like 2022. But again, I would say that's perfectly fine. And then net cash provided by operating activities between 360 and 380, and capex of 20, and free cash flow between 340 and 360. So let's check out those as well. So funds from operation will be 360 to 380 compared to 340, so higher there. And then free cash flow, they are expecting 340 and 360, and capex of negative 20. So a huge reduction in Oh, this is years. That makes sense. Let me actually look into it here. So net operating cash flows between 360 and 380, massive improvement from what we have been seeing. Capex, they are expecting negative 20, which is a fairly solid improvement as well, cutting costs there. And then free cash flow, they are expecting, did that say 340 to 360 compared to 120 for their last quarter? So if they can achieve that, that is massive. Hopefully they can. And now let's look at the year over year guidance and see what that looks like. So full year 2025, 4.25 to 4.3.5 revenue, which is, let me go back to the income statement here and go to the years. So that is, again, massive revenue increase from 2024 at 3.6. So either way, they're assuming a huge increase in sales. Booking will be increased massively as well. Net loss between right around $1 billion, which is about the exact same for 2024. So like I said, it'll be a couple of years probably till we see profitability, which is understandable because they are driving growth. So that is mostly fine. Other than that, EBITDA 190 and 265. Let's see what it is here. And let me just make sure that is EBITDA 190, 265 million, deferred revenue of 975. So they are expecting a positive EBITDA, which is interesting because their net income will be negative. So That is interesting. I hope it happens. I hope that does happen. But other than that, free cash flow is also, I believe, expecting a very large increase. Let's take a look at that as well. And again, I apologize for clicking around so much here, but I just want to compare the numbers to what we're seeing now. So free cash flow is at 640. They were expecting 800 to 860, which is amazing if they can achieve that. I'm sure they will be able to, honestly. And then capital expenditures of 250 compared to 181 for the full year 2024. So they are expecting a pretty large year-over-year increase. However, that's not the largest we've ever seen for them. So overall, I would say across the board, guidance looks great. Earnings look really strong recently. And yeah, the company looks very good. I'm not personally invested in this, so there is no real bias there. I'm not planning on buying them right now, at least just because I think the company is worth a lot. And if that guidance doesn't come in strong, I would say it will probably be a rough situation. But overall, we're seeing very strong uptrends right now with them. They have broken out of kind of the slump that they've been in since 2022, which is great to see. I hope they keep growing. And I believe that is everything I have for Roblox today. So thanks so much for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.